So you've probably heard of SMH VanEck Semiconductor ETF and the great success it's had over the last 10 years, up over 1,000%. But have you heard about VanEck's new ETF, SMHX? This is their Fabless Semiconductor ETF that launched in August of 2024. This new ETF allows investors to focus on innovation-driven companies that leverage external companies for production, which can enhance agility and innovation in sectors like artificial intelligence and consumer electronics. In this video, we'll dive into what makes SMHX unique, why it was created, and who might benefit most from investing in it. Unlike more generalized ETFs, SMHX is specifically crafted for the fabless semiconductor industry. This ETF's objective is to replicate the performance of the Market Vector U.S.-listed Fabless Semiconductor Index. That index tracks the overall performance of the U.S.-listed companies deriving at least 50% of their revenues from the semiconductor industry, specifically those that operate as fabless companies. And if you're finding this breakdown helpful, go ahead and give the video a thumbs up. So what does fabless mean exactly? It's a model where companies focus on designing semiconductor chips and outsourcing their production to external companies rather than building and maintaining their own manufacturing facilities. This approach can enable rapid innovation, allowing companies to focus on design and technology advancements while leveraging specialized production facilities for the actual manufacturing process. As of October 30th, 2024, SMHX's top holdings include leading companies in the semiconductor sector like NVIDIA, Broadcom, Astera, AMD, and Synopsys. These holdings highlight the ETF's focus on high-performing, innovative companies driving major advancements in the tech world. The ETF also maintains an expense ratio that matches that of SMH at 0.35%, which is reasonable within the sector. And if you're curious about how Big Brother SMH fits into a powerful 3 ETF portfolio strategy, check out the link above to the related video where I break down a balanced portfolio that leverages SMH's strengths along with 2 other ETFs. And I'll also provide a link in the description. Okay, back to SMHX. It offers concentrated exposure to the fabless model within the semiconductor industry, making it a compelling choice for investors looking to gain growth in the specific high-tech areas while avoiding the capital-intensive nature of chip manufacturing. Which sector are you most excited about or already invested in? Let me know in the comments below. So why did VanEck decide to create SMHX? The fabless semiconductor segment has been essential in driving innovation, and VanEck saw a growing demand for specialized ETFs that let investors target high-growth sectors more directly. By focusing on companies that rely on the fabless model, SMHX aims to give investors streamlined exposure to businesses with a lean, innovative approach. The semiconductor industry itself is at the heart of critical advancements in technology, and fabless companies are uniquely positioned to adapt to shifts in tech trends without the heavy investment in manufacturing facilities. The creators of SMHX likely saw a gap in the market for an ETF that does more than just track big tech names. It offers focused exposure to companies playing a pivotal role in developing areas like AI and advanced computing. SMHX also brings strategic diversification benefits for investors who already hold broader market ETFs, enabling them to balance broad stability with sector-specific growth. However, it's essential to recognize that the semiconductor industry is cyclical and influenced by factors such as supply chain dynamics, tech advancements, and global economic conditions. So who is SMHX ETF for? Every investment product has its ideal audience, and SMHX is no different. This ETF isn't a one-size-fits-all. It's designed for investors who want exposure to the high-growth semiconductor sector without needing to monitor multiple individual stocks. If you're an investor who likes to stay ahead of trends and wants exposure to companies that focus on innovation in tech sectors like AI, SMHX might be an attractive option. Investors who already hold broad market ETFs might find SMHX useful as a sector-specific addition. On the other hand, if you're someone who prefers a conservative approach, SMHX may not be ideal. So there you have it. We covered what SMHX is, why it was created, and who might find it a valuable addition to their investment strategy. Remember, no investment is without risk, and it's important to consider factors like industry cycles and economic trends when evaluating SMHX's potential performance. If you enjoyed this breakdown, don't forget to hit that like button and subscribe for more insights on trending investments. And let us know in the comments, is SMHX something you'd consider adding to your portfolio? Or are there other ETFs you're curious about? We'd love to hear your thoughts. As always, thanks for watching and hanging around to the end. Remember, I'm here to make content focused on your money and how to manage it best. See you in the next one.